It's Sunday, January 14th, 2024. I apologize. There is some wind today. Hopefully it's not coming across too bad, but you can definitely hear it up in the trees this morning. I want to shoot a video today and just talk a little bit more about what is happening to the U.S. economy and why you need to stay on track and keep preparing, because they're telling us that inflation is going away, that there's going to be this soft landing. It's the farthest thing from the truth. You're going to see inflation continue, not to just go down, it's going to go up. And there is going to be no soft landing. We are really getting ready for a very, very serious crash landing here. We're seeing crash landings every day in this economy. And for the people out there that, write me and tell me that manufacturing is booming in this country, manufacturing is in a depression. Let's just face reality. I'm not here to get political. I don't care if you're right, left, anywhere in between. We are purely here to talk about economics. We're here to talk about preparations. We're here to talk about what's happening socially and what you need to be doing right now. Last night, I read an article. Shipping costs are now soaring over 300% because of what is happening in the Red Sea right now. 300%. So these ships now are having to go through alternative routes, which are taking 2 to 4 weeks longer than going through the Red Sea. And this is now tacking on 300% in shipping costs. Now think about what's going to happen when some oil refineries start blowing up in the Middle East and oil prices go up. We are really watching a perfect storm take place here. Things are really beginning to accelerate, and here we are in 2024, just a couple weeks into 2024, and look at the damage that we're witnessing take place daily, and it's happening globally. Here's one that we talk about daily, that is going to affect millions and millions of people. It's affecting them right now. It's credit cards and credit card delinquencies at near highest level since 2012. I think about these people that have all this credit card debt, and what happens when those credit cards no longer work, when they've maxed them out and they can no longer turn to a credit card. What happens to these people? We're heading into the greatest depression in world history, and people are going to be tapped out. How in the world are they going to survive this? It says here, banks have been granting fewer credit line increases and reducing credit lines more frequently over the past 4 quarters. So if you have a $10,000 balance, they're telling you, well, we're cutting it to 5. You have a 5, we're cutting it to 25. And at some point, I think we're going to see a time where these banks just say, hey, we're shutting your credit cards off completely because we know you're just going to default. And these banks have got to wake up to this, right? They've got to understand that the economy is horrible, and people, the only way they can spend is if you allow them to with credit cards, and this is how they're doing it. Or, of course, they can take a payday loan and pay 400%, and they're doing that too. So, people are in a real conundrum here because they've got to pay their heating bills, they got to pay their food bills, and they can't do it. They're tapped out. And so the only thing they can do now is use the credit card. And when the credit card gets tapped out, because the savings is already tapped out, what happens? Comment down below. What is going to happen to these people? Do you know people like this? I do. And they I think they believe that some miracle is going to take place in 2024, that their paycheck is going to double, that the government's going to give them a bunch of money, and they're going to be okay. I mean, people are really delusional right now. And if you're a delusional person, this is really going to get you hurt as things in this economy continue to worsen. TheRealDeal.com, I was reading this article last night, and it was talking about distressed properties in Los Angeles County and Orange County, California, 2 of the hottest housing and commercial markets in the entire country at one point. Now, distress loans. We're seeing $21 billion in commercial mortgage-backed security loans coming due this year. $21 billion just in Orange County and Los Angeles County. And, people will tell me, oh, Orange County, everybody's rich. And half the people in Orange County rent, maxed out credit cards in Orange County, There is serious wealth in Orange County, don't get me wrong, but there's a lot of people trying to keep up with the Joneses, and many people in Orange County rent homes and live off of credit cards and lease cars, and they just live this fantasy life until something bad happens. Back in after the '08 crisis, Orange County, California went bankrupt. Okay, so this wealthy area, so-called wealthy area that, oh, you know, this cannot affect places like Orange County. Well, Orange County went bankrupt after the 2008 crisis, so we need to remember that. A lot of debt is coming due in Orange County and LA County. $30 billion came due last year. $2.7 billion was paid off, tied to 400 properties. 60% of commercial mortgage-backed securities and CLO loans are coming due this year. They're either on the watch list or in special servicing. So what does that mean? Well, it means that these properties are already in big trouble, and it's indicating that a default is expected to occur or already has occurred. About $250 million worth of loans are delinquent before they even come due, according to this article. About $250 million worth of loans are delinquent before they even come due. About 30% of the loans are coming due are tied to retail properties, including regional malls. This is LA and Orange County, two very affluent counties that are looking at big trouble because of what's happening in commercial real estate. 22% are tied to office buildings, and 19% are tied to multi-family. So do the math here, ladies and gentlemen. Big trouble coming to these two counties. And again, we are really witnessing a perfect storm take place. What is happening globally? The global debt over $300 trillion. Within 80 days, America will have $35 trillion of its own debt, not including unfunded liabilities like Medicare and Medicaid. Household debt at all-time highs. We've blown past $1 trillion in credit card debt. And remember that credit card debt, going back to that, you're looking at 22.75%, almost 23% on the average credit card now. And the average person has probably at least 5 credit cards. And you know people that have 10, 15 credit cards. Could you imagine just paying the minimum? Just say your minimum is $100 a month on 5 cards. That's $500 a month just in interest. You're not even touching the principal. You're just paying the interest. You will be paying this for 10 years plus. You will be paying thousands of dollars in interest before you ever pay this stuff off. And I just don't think most people are going to be able to do it. I think we're going to see so many job losses and so many people just give up and quit because they're too far behind. And the cards are going to get maxed out. They're going to get shut off. And people are going to be on the hook for a lot of debt. And of course, people will just say, well, they'll file bankruptcy and ride off into the sunset. Could you imagine going into the greatest depression in world history and you're bankrupt? How, if you can't feed yourself right now without the use of a credit card, how are you going to feed yourself when you're bankrupt? Because they're not going to give you another credit card. You're not going to be able to rent a room. You're not going to be able to do anything. You got to have good credit right now. You should be building your credit up. You should be building cash reserves up. You should be paying the debts down right now. You should be living way below your means. You know, if you make $100,000 a year, you should be living like you make 50. If you make 50, you should be living like you make 25. If you make $500,000 a year, you live like you're making 250,000 max. That's how you should be living right now. My opinion. That's my strategy. I live way below my means. And I do it for a reason, because I see the writing on the wall. I see what's coming. And of course, there's going to be opportunity coming. And if you have cash, if you have assets that you can convert into currency or trade for another asset, you're going to do, I think, very, very well. Here's another one from MarketWatch. Westfield Mall, San Francisco, sees value slashed by 75%, erasing nearly $1 billion. The upscale mall is slashed to $290 million from $1.2 billion back in 2016. There were people years ago that said there could never be a commercial real estate crash. That's where you want to be investing. Think about pensions. Your pension could be highly invested in commercial real estate right now, and commercial real estate is going to take a massive haircut. It took a massive haircut in 2023. That was just the warm-up. Wait till you see what's coming. It's going to be much, much worse. So pensions are heavily invested in this. You've got all kind of people invested in commercial real estate, but what's scary is the amount of pensions that are heavily invested in commercial real estate. And commercial real estate is just going to be, it's going to see the worst depression it has ever seen. So when they tell us that this could never happen in commercial real estate, it kind of sounds like when they told us and keep telling us that this will never happen in housing. Prices could never go down 50%. They can't go down 75% like the Westfield Mall in San Francisco. That can't happen. Oh, it can happen. It can happen, and it's going to happen. You're going to see not just a commercial real estate collapse, which has already begun. It's been going on for at least a year. You're going to see this transition into the housing market. Why? Because the debt-to-income ratio is completely unsustainable. And too many people are losing jobs, and too many people are going to lose jobs, and prices are just too high, and nobody's buying homes. That's the bottom line. And when nobody's buying homes, something has to give. It's going to be prices, ladies and gentlemen. You have a shrinking pool of qualified buyers, too. You have more properties coming on the market, and you have less people every day because their credit's being destroyed, or they've eaten up all their savings. They don't have a down payment on a house. So you have less qualified people in this pool of buyers that are able to buy a home. So that tells you and I that at some point, the housing market is going to have to wake up, and these overvalued, overpriced homes are going to have to come down, or they're just going to sit on the market forever. And that's not going to happen. Typically, the seller at some point is going to have to give in. We've already seen that with home builders dropping prices 18%, 20%, and you're going to see home builders have to drop a lot more. They're buying down mortgages, they're throwing in incentives, they're throwing in the granite countertops, they're throwing in a swimming pool, they're pushing prices down, they're doing whatever they can to do to incentivize buyers to come and buy a house. The existing homes with the existing home seller is not so savvy. By the time they wake up to what's happening, the price of their home is going to look a lot different than what they're asking for right now. I look at homes every day, especially in the South where I'm moving, and it is not uncommon to see a home on the market 90 plus days, 180 days, over 300 days on the market, just sitting there. And what if the owner of that home loses their job, or their spouse loses a job? You think that they're going to maybe be a little more motivated? Or in this area that I'm in Big Bear, there's so many VRBOs and Airbnbs. What happens, like what is happening right now, these homes are not renting. And somebody in Orange County owns 3 Big Bear properties that aren't renting with 3 highly leveraged mortgages. What do you think they're going to do? They'll be lucky. We're going to get to a point where they're going to be lucky if they can sell the homes, because when they begin to lose equity in these homes as the market falls, and it's going to fall drastically, when they begin to lose equity and they've borrowed money out of these homes, or they bought in a very overpriced market, they're not going to be able to get out. Remember, you've got closing costs, agent fees, about 8-9% on the home. They're not going to be able to get out. They're not going to be able to get out. And this is when you begin to see the short sales again, the defaults, the REOs, the bank-owned properties, and here we go all over again. So anyways, I'm going to leave it there today. I'll throw a little bit more B-roll on this video. Please like, share, subscribe. God bless every one of you. Stay safe. Exercise situational awareness, be preparing, stay on track, and as always, I look forward to speaking to each and every one of you. God bless.